Okay, welcome everyone to the last patterns video. Again, I can't emphasize this enough. I want you guys to come back to these videos at a later date. At a later date, please, once you've stuck with a strategy, it's working for you, you know what you're doing, come back and then perfect these three patterns so you can really start, you know, really start making money, really doing some damage. Because first you need to get the foundations. Your first foundation is the zone. You need to perfect that. Then, well, actually, no. Your first foundation is market direction, market structure, the bias. First, you need to perfect that. Then you can start worrying about your supply and demand zones, and then you need to perfect your entry criteria. Once these three things have become habitual and they've become a habit for you, then you can come back to these three patterns and say, okay, you know, I'm ready to take it to another level. Okay, this last video that we're doing on the patterns is, you know, if you've been trading for a while, you already know what a head and shoulders pattern is, okay? Head and shoulders pattern. Okay, we'll just quickly look it up to see kind of what it looks like, you know, what Google's definition is at least. Head and shoulders will be found anywhere in a key area when market is about to reverse. Okay, if we've been pushing up for a while and it's getting ready to reverse, we'll have a this is like the textbook example of what they say should happen, right? But I found that there's a little bit of a difference nowadays because markets are always evolving, and the way that I take it, and I don't take it any other way, because it just, if you find this, man, you're gonna make some money. Okay, it should be the left shoulder, the head, and the right shoulder, and then we should break the neckline and just go short. Or it could, if it's the inverted version, it should be the other way around. Now this, again, I know I keep talking about selling, but some of these patterns and things just work better for me in a selling market. I don't know why. I haven't really experimented too much in the inverted version, but for me, if I see that price has been pushing up for a long time, okay, if we clearly look here, we can draw out our head and shoulders, okay? There's multiple ways of actually drawing it out. You could have said that this was the left shoulder, this was the head, and you could have, some people will take this as the right shoulder, but just, you know, I mean, yeah, people will take this as the right shoulder, okay? What you'll see many of the times, I wouldn't even take that as the right shoulder, but potentially, right? You could take this as the right shoulder. Now, what I've been finding a lot, and I've been taking these trades over and over and over again, and I haven't missed once with this pattern. Just been amazing the last few months. If you are in a key area, market has been pushed up a long time. Maybe you see the 3-pin formation happening on the daily or the weekly time frame. Okay, and you somehow, you know, you weren't able to catch some of these trades on the way down. Okay, this is the right shoulder. The textbook says we should just move straight down. We should break this line and we should move down. That does not happen. At least for me. Sometimes it will. What I find is, okay, and we'll maybe write this down. Okay, we'll write this down. Wait for the retest of the right shoulder. Okay, wait for the retest of the right shoulder. Left head, shoulder. Okay, if you miss this, that's fine. What I want you to do is draw on the higher time frames. You know, this can also be considered a shoulder here as well. If you miss this whole move and you considered this a shoulder and you missed this move as well, okay, wait, just give it some time. We have liquidity sitting right down here. Now we have a bunch of money sitting right down here. People have gone long as well. A lot of people have shorted right here and gone stopped out. Wait, draw out a zone. Okay, draw out a zone. You could potentially draw, you could have potentially drawn this first as a supply zone. Okay, depending on what kind of entry criteria you would have gotten, you would have maybe gotten in. But the better zone would have been all this push down created this supply zone. This was the proper supply zone. Okay, right there. Wait for this to happen on the 4-hour. Get a very clear, draw this out. Text it out like left shoulder, head, right shoulder, waiting for it to come back to the right shoulder, and then try to draw the higher zone. This would be the lower zone. Try to stick to the higher supply zone, which would be this area right here. Okay, let me just highlight that out. That area. This area right here. Okay. Let's just move it around right there. Boom. We're wanting to come back. So a lot of people are gonna go, okay, this is head and shoulders. There's no way it's coming back. We're gonna go short. They're gonna try to find shorts here. They're gonna try to find shorts up in here. Be careful, because market I've noticed is will just come back, take all of these people that think, oh, we're in a head and shoulders, let's sell, sell, sell. It's gonna take everyone out one last time. One last time. Just look at this big doji that I threw up. One last time, it'll take you out to move down. So I'm expecting this to now continue down, because it's done what it needed to do to take people out. Then you see the retest of the shoulder, happen fully. This would have been your zone here. You would have had it probably drawn up in this area, and then look, you even got the first pattern that we talked about, the 3-pin formation happening right here. If you took this on the higher time frames, right here. Okay, this really pushed up into our zone. You would have had to really refine the zone on the 15-minute here, but I think you would have been fine. This trade could have been taken even on the 4-hour time frame, when we threw up this, this candle and we broke the low of it. You could have taken this on to be safe on the higher time frames. Not that you need to, but it could have happened, right? And you could have pushed down all the way for that 1 to 3. You'd have probably gotten stopped out here, break even, but that's fine, because then you can hop back in. And we broke all of the structure to the left on the lower time frames. This candle here could have been a supply zone, because we know we've already taken out the top supply zone. Okay, so this is a really good pattern that I've been seeing happening over and over and over again. It's like, especially with the USD Japan and some of these other pairs, this just keeps happening over and over. Like, it just keeps happening. Look at this. We were pushing for a long time to the upside. Long time to the upside, and we have the left shoulder, the head, the right shoulder, right? This was the best shoulder it gave us. According to theory, we should, after this break, we should just never even come back here. Look how clean this trade is, man. Look how clean this trade is. And I'm actually going to be adding one more video before we talk about emotions to the Extra Confluence series, which we're going to cover what these big candles are. This is what I would call my textbook example trade. This is my textbook example trade, right there. And for any of you guys who bought the course, just know that I'm going to be adding a lot more information in the coming weeks, okay? Because I want you to spend the first 2 weeks not even having to go into really the extra confluences area. You don't even really need to go there. But should be about next week, I'm going to be adding examples of textbook trades to take. We're going to be creating a whole worksheet around textbook trades that I've taken, because I'm going to be doing a video on YouTube about journaling, and in that journaling I screen capture all of my trades. So I'm going to make maybe a PDF or something along those lines to show you some textbook example trades. This is what I call a textbook example trade for many reasons. Number one, we have the head and shoulders. We have a very strong supply zone that broke structure. Number two, I would consider this a flag. Okay, I would consider this a flag. This is a flag. Look, perfectly drawn. Okay, perfectly drawn. Number three, we have imbalance left in the market with this big candle. This, oh my God, if you see a trade like this, I would use 2%. Don't do it in the start, but once you get comfortable, like these trades, I can smash these trades now. You don't even need to go all the way. Like, you can just go get you can just scale in with 2% and get like 8R out of this trade. If you're very disciplined, wait for something clear like this to happen once a week. Don't need to be driving yourself crazy, entering trades left, right, center. Do that on a demo. Do that somewhere else to take away the urge. But if you have a funded account, or if you're trying to do a challenge, wait Wait until it's absolutely clear. Wait until you have a clear supply zone, a demand zone. Wait until you get the 3-pin formation. Wait till you get the break of the candles on the higher time frames, the 1 hour, the 2 hour, the 30-minute, the 4 hour, for example here. Wait till you see a clear bear flag. Wait till you see a clear direction in the market. You know? And you can go do crazy things like this. Absolutely crazy. 140 pips. If you were able to scale in, which 100% you would have been able to find a scale in here, no problem. You know, this could have been a 10-hour trade challenge done. Okay, that's how I did the challenge in 1 day. I didn't get a chance to hold those trades that I took, but I just found some really textbook example trades that I've already shared in this strategy, and I just smashed them for like 2R, 1R, 1R, 2R. I was just in and out. I was just getting the right entries. 1R out, 2R out, scale in, scale in, scale in, scale in. 25 hours later, I was done the challenge. You know, and it's live on YouTube for you to see. I documented the whole thing. So, yeah, we're going to go into one last video talking about imbalance, and we'll actually start the video right from here. And we're going to end that video, and then we're going to do one more video on emotions, and then we're going to move on to phase 5, which is how to get funded. It's going to be a short series on how to get funded. I'm going to add more stuff to it as we go along. But if you've come this far into the course, please, 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 please listen to me. You don't need to go any further than the emotions video. Okay, you really don't even need to watch these pattern videos right now. The correlation videos right now. You don't really even need to focus too much on that. I just want you guys to focus on finding the direction of the market. Number one, write all of this down. Write all of this down. Find the direction of the market. Okay, number one. And I'm gonna have a little cheat sheet as well that I'm gonna put together at the end. You know, perfect your supply and demand zones. Once you think you've gotten very good at perfecting supply and demand zones, you know in a strong push if there's 2 bullish or bearish candles, we can draw a new zone. Try to start, don't even go on to the 50-minute to start with. Do this all on the hourly. All on the hourly, back test on the hourly. Once you have done all of that and your entry criteria is great, not good, but great, then I want you guys to come back into these videos and worry about pins, patterns, imbalances, things like that. So we're going to end this video right here. We're going to go on to one more video, and then we'll move forward.